You're listening to the audio portion of Workshop Wednesdays. Workshop Wednesdays is a free live discussion about topics affecting accountants, bookkeepers, and business owners. You can join the AVO group in Facebook to participate live Wednesdays at 10 a.m. Pacific Time. Just search for ABBO in Facebook. This podcast is brought to you by Schoolofbookkeeping.com, where you will learn, grow, and build a thriving bookkeeping practice. We have hundreds of lessons with almost every aspect of the industry. Start your free month today at Schoolofbookkeeping.com.
Welcome to another Workshop Wednesday brought to you by Schoolofbookkeeping.com, which is casual conversations for serious workflows. But today we're going to be, we've kind of talked a little bit last week about the whole idea of disputes and how to kind of handle that inside of QuickBooks. And we talked a little bit about the new QBO, new payments issues that happen. And we did want to put out a little disclaimer. Well, after we had talked about that last week and we kind of shared that, we have it on a blog now. It's come to our attention that if you are doing firm build, setting up
Merchant
QBO, well, if you're doing
firm build QBO account.
yes, the firm build and QBO account. So like you're in your QBOA and you create a new QBO subscription for your client and you are managing the billing. That situation does not create this whole process of the half created merchant account. It's only for companies that are direct billed. I don't know if that means that if you're using the direct billing method inside of QBOA, right, like you're creating it and then giving them, your discount, your pro advisor discount for the first year or whatever that happens to be, if that causes that. But we actually tested it yesterday with a brand new trial. And so what ultimately happens is during the setup interview, it asks a question about, hey, let's set up your invoices so you can get paid. And you don't even have to acknowledge. You can even skip it. You can even skip the question, and it's still what ultimately happens when you go into an invoice. The check boxes to turn on credit card or ACH, they're available to check, right? So they're not turned on by default, but they're available to check, right? And I would assume, we may want to dig into this a little bit deeper. I would assume that if you had answered the questions in the setup interview, yes, I get paid by credit card, or yes, I get paid by ACH, that they would have been checked automatically for you. But again, that's that half set up QuickBooks Online payment account where we'll send the invoice with the pay now button. They could potentially be, set you up, and collect the funds. And then it will ask you to finish the setup. And also another thing that came up, Carrie, what if they are an industry? What if they're a gun seller, right? Or if they're selling marijuana, those risky industries that aren't supported with a payments company, because they haven't set up the whole account yet. That comes after. Yeah. So what happens to the money at that point if they are actually a company that's not supported in QuickBooks payment?
Wow,
that's thoughts on what would happen there?
We don't know. We've got to find out this for our audience, because that's a really good question.
There is a list. There's a list of non-supported payments accounts that QuickBooks Payments doesn't support. So how would they know until they've actually gone through the process of applying for the merchant account? But here is this half set up situation.
So that's for the people that are the QBO account holder, but their customers, what are they just receiving the same old electronic invoice that
Mhm.
we love? Pay from anywhere. You could be on the beach, you could be in the
Yep.
bathroom, you hit, and then they select ACH or credit card, and then that money is sitting somewhere until the holder of the QBO account gives them their banking information. But I would think that they need to give industry and stuff. I don't know.
Yeah. Yeah.
Does
Yeah.
it
Because
act-
when you apply inside of, and maybe that's what we do next week is actually really, do a little demonstration of how this shows up.
Yes,
But
that would be
but you once you're at the point of the money has been collected, then there's QuickBooks Online will then say, okay, well, let's finish setting up your account. The first thing is tell us about you, tell us about your business, and tell us about your bank.
then we
Those
go
are the things. Those are the three things that they need to know in order to finish setting up the merchant account for them. And that's when they're going to say, "Oh, we didn't know that you were selling ammunition," or "Oh, we didn't know that that you were in the cannabis industry," or you know any of the other high risk industries that they would prefer not
so
to have.
there must be some sort of a this is what we need to learn is what's the process when that happens? So the money sits in a holding account and you got to just reverse and give it back to the customer. That's fine. Because I know that I've seen people complaining in the interwebs about my money's trapped. So I would imagine that they just want to then say, "Oh, ew," and send it back. Probably. And then you have, the customer and then all that drama. They think they paid and then they get the money back.
Yeah,
Yeah.
but
So
Susan
that
brings up a good question. You're like, how can you give it back if you never got it? But that would be
well, the
more of the intuitive
Intuit
folks, right?
Intuit would have to give it back. But then
Yeah,
because it didn't really hit your bank account, there's no audit trail. So, yeah,
yeah,
that's a
it's a
good question.
mess.
We'll ask our reps how
Yeah,
what they know about that because
right.
I don't think that I think that this happens from time to time, but like all the apps that come through us, most of them we rarely hit those industry no-nos. It's 1%. So they probably they've gotta, there's gotta be a system, but I think they just go, "Ew," and send that turkey money back.
That would be That's probably the case. We'd hope so that they would be, forthcoming, but it's a mess, right? And when that sort of thing has happened, it's like, you drove over the tire strip at the parking garage and now you need to back up. Uh,
And I
you
need
know,
my tires and there's
severe tire. Yeah. Yeah. You end up
there's
with some
fees.
severe tire damage here.
Yeah. That would be it. We do need to put a pin in that idea and see what that really means because like Susan pointed out, it didn't hit your bank account, so you really can't follow the audit trail. And we've had customers that have said, "Wait a minute, we didn't want payments. Now what?" But I'm like, "Well, you got the money, can finish it out and get paid, and then I don't know, cancel." But once you see how easy it is to use, it's sort of you're not really cutting edge if you don't offer that electronic invoicing. So it is the way of the future. I absolutely love when someone sends me an invoice. I love when I go to lunch with my friends and I owe someone money. Boop! If they don't have Venmo set up, I'm lost. Are you kidding? I've had friends that say, "Write me a check."
Oh,
No, set up some electronic PayPal, Venmo, Apple Pay. I don't know. Make it so I can dump the money back to you and I don't owe you anything. I don't want to carry cash.
all right. Carry cash. That sounds like a new currency with
Yeah. Mm.
if we can get some
I'm
cash
real
out.
cashless. I'm usually cashless carry. I don't have it in my wallet. So
Right.
a pickpocketer would be very disappointed looking
Yeah.
for cash money.
So our original topic was going to be about issuing refunds. We got sidetracked talking about
That's what we do. It's a
last
casual
week.
conversation.
But let's, so I mean, it's, tailing off of Susan's, how do you give it back, right? So we wanted to talk about refunds, right? So when you've collected money from someone electronically, depending on the method of how you've collected it will determine how you give it back, right? When there's money movement happening over
You're
electronic
listening to the audio
means, right?
portion of
Digital
Workshop
transaction
Wednesdays.
of
Workshop
funds.
Wednesdays is a free
If it's a
live
bank
discussion
transaction
about topics affecting accountants,
that falls into one
bookkeepers,
bucket,
and business
there's
owners.
credit card transaction.
You can join the
which
AVO
falls
group
into
on
another.
Facebook to participate live
So,
Wednesdays at 10 a.m.
When you
Pacific
have
time.
charged
Just search for
a credit card
ABBO
or receive
on
money
Facebook.
with a credit card,
This podcast
the
is
money
brought to you
has
by
to go back on the
Schoolofbookkeeping.com,
same
where
card
you
that
learn,
it
grow,
was
and build a thriving
collected on.
bookkeeping
Right?
practice.
You cannot,
We
Right.
have hundreds of lessons
you
in
cannot
almost
Today I
every
will
aspect of
damage,
the
tomorrow
industry.
master
Start your free
card.
month today at
Right.
Schoolofbookkeeping.com.
that
It's
falls
just
under
like
the
an
money
undo.
laundering bucket. Right? So there has to be, a record of the original transaction in order for it to go back to the same card. So when you're doing it inside of QuickBooks, QuickBooks Online has this concept of a refund receipt where QuickBooks Desktop has a credit memo and then a subsequent refund given that. So it's a two-step process in Desktop, whereas QuickBooks Online has a refund receipt, which is an equal and opposite type of transaction of a sales receipt. You're putting
Mhm.
in the items that were sold so that the revenue uh, and the
Right.
income is reversed, right? Based off of the refund, and then the money actually going back is initiated through the refund receipt. Whereas QuickBooks on the desktop is more of create the credit memo, and then it will ask you, are you giving the money back? Right? Because there could potentially be two things when people are canceling their sale, right? Carrie, it's you could just leave it as a credit on their
Right.
account and then apply that to them without giving the money back. And that's typically the preferred way to give money back, because you would like a
Right. Yeah.
future sale to offset that, right?
Yeah, definitely. But that doesn't always happen. I mean, if you say, 60-day money back guarantee, you have to stand behind that and do it the way that Intuit wants you to do it, which makes sense. We don't want to be money laundering for sure. It does get tricky though that we need to point out when they use ACH. It's not that
Yeah.
easy. You're not hitting the undo button like I love to hit in Excel and Sheets and Doc. There's no undo button with ACH. It's what's the process, Dan, in the
Yeah.
world?
So the challenge is that the ACH has a different set of rules, right? Because normally with the bank transfer, it's there's usually there's time involved, right? So it's when it's ACH, when you charge somebody by ACH, you're pulling money from the bank. There's a time, to take 2 days to get to the source, right? Or the destination, I should say. And it's not like you can just reverse that, right? And just, you know, and that's what the, the refund receipt and being able to process a refund on a credit card will actually do, because it sees the original transaction and is able to offset that. So
Credit cards are
ACH
much
is more, yeah, ACH is more of like a one-way thing, right? It's you can't go back. You can't go back, just like on a one-way street. You really shouldn't be driving the
higher
wrong
and then
way.
this things backing up into going to rent your car, and then you're like, "Oh, I forgot to tell the guy at the booth this," and you hit the reverse in your car. You can't do that with ACH. Nope.
Right. Yeah. Today's day analogies are all about the cars. So we've got tire tracks and we've got one-way streets. So you can't drive on the opposite direction of a one-way. Well, I mean, you can, but only for
Yeah,
a
but you
limited time
shouldn't. Or somebody comes
before,
up to you.
right.
Yeah.
So with ACH, you have to go down another one-way street, right? So you would have to create either, write a check or send your own
Get a
ACH.
letter.
Yeah, in order to
What
send
is
the
it
money
called in
back
in
to
QBO? Because in desktop, you create a credit memo for step 1.
right. You would, I mean, I think the best option is just going into your bank and using Zelle or some other method of being able to initiate that money transfer back to them. Sending it via PayPal or you know
Right.
you have to figure out a way to get the money back to
Get it
them.
back.
You can't use the merchant
Yep.
service to be able to do that, with a small exception. And I haven't actually seen it work, and maybe Susan can chime in because she knows about it. So in the merchant center, when you go into when you have a QuickBooks Payments account, you have access to a merchant center, right, where you can see all your transactions. You can run reports and see the deposits. It'll show you the breakdown of the deposit to help you reconcile those things. And in the merchant center, there's a way to process a refund. And then e-checks is one of those options. Now, not seen I've not seen an ACH show up in there to give it back, because there was this whole check processing service with regards to the QuickBooks payments accounts. That was kind of like an add-on service where you could kind of like scan, the old days when you actually could take checks. Or when you did take checks, the check scanning little thing. You know what I'm talking about, Carrie? Where they like
Mhm.
run the check through and then it actually approves the check. I don't think ACH falls into that category, but I've heard conflicting stories where, like, if I have done an ACH transaction, I could feasibly go into the merchant center, find the ACH transaction and refund it that way. But that is more of a check. That was my impression of what that ACH, or I'm sorry, the e-check reversal was, is that if you actually processed a check transaction, not an ACH transaction. Oh, Sheehan says, haven't had to try that. So that's always a good
Yeah.
thing when you haven't had to give money back. Uh,
I don't like giving money
uh,
back, but it happens.
but it's in there, and I've heard conflicting stories about being able to use that for ACH
So
refunds.
it's not intended for an ACH refund. It's basically if you receive a check and you're, like, taking a photo of it and depositing it, that can be returned?
Yeah,
Okay.
right. But I don't know. I don't know how it would show up in there if you haven't actually processed through the check processing. There used to be, a little
Yeah.
check scanner hardware device
Yes.
for QuickBooks Desktop that you could, use to, receive checks that way. But, these days with mobile deposits and those types of things, they may have just been a
They
service
probably
that kind of died off there.
Yeah, I think you're right. I think I bet you this is caught in that same thing like we just figured out the gun sales in cannabis.
Exactly.
It's one of those little teeny weeny things that they just didn't intend to continue with that because like you say, I could take a picture of a check and deposit it right in my account. So there's really no need for them to keep the development on
Right.
that. We have
And
workarounds.
regardless of that, if you do anything inside the merchant center, that only affects the reality of the money movement, right? You still need to go into QuickBooks and
Yeah.
account
QuickBooks
for
is
how you've
still
given the money back.
good point.
Right. So one of the other things I wanted to point out about giving refunds is when you're running reports inside of QuickBooks on a cash versus accrual basis, and let's say you're on a cash basis and you've used an accrual based transaction like an invoice, right?
Mhm.
Ultimately, QuickBooks when it comes to the QuickBooks reality of an invoice based on a cash reporting basis, it's only going to show the revenue and whatnot based off of whether that invoice has been paid, right? So that's the caveat, the fundamental truth, right, of the reporting things when you're using an accrual type of transaction of invoice versus a separate event of getting paid on it later. So when you're giving money back, you want to use the opposite transaction of what you did use, right? So uh,
Right.
what a lot of people tend to do sometimes is go into the invoice and put in that they've given money back on the invoice, or maybe they've exchanged, like, hey, this shirt didn't fit. I would like
Yeah,
to
no,
get I would like to get this shirt instead. So they'll go into the original invoice and put in
and
what
fix it.
what they're returning as a negative, and then, put whatever is being exchanged as a positive. That's a that's a bad idea.
Don't touch the
Simply
leave the integrity of that data behind the alone and create a second transaction.
so what do you feel like why is that a bad idea to
Well,
do
you
that?
want
I
it
have my own
you
opinions about that.
or they deleted fr so, I mean, so when you reconcile, you want basically all the transactions to match up with your bank, and you want your QuickBooks to reflect that. So that's a separate transaction. You don't wanna kill the integrity of the original transaction. I mean, you can copy that and just click that invoice and say, "Credit this back," and it pulls in the same item codes, and then you can refund how you can refund using a check. But that gives the 2 transactions, and then you can bring in that deposit just like it came in, and then that outgo is on the right date, and that keeps you reconciled to the bank. Otherwise, it kinda kills the integrity of your file and your workflow.
Right. And then the other aspect of that is that the way QuickBooks handles negatives on accrual-based transactions on a cash basis is terribly confusing, right? Because if you're using a negative on the original transaction, then QuickBooks determines that as a payment, right? So it has to
Mhm.
go, okay, well, this negative, has to be a payment. So if you've got 5 other line items on that particular transaction and this negative only applies to, say, 33% of the total sale, then QuickBooks has to go through and go 33% of this returned item needs to be applied to these 5 items proportionately. So then looking at that original invoice on a cash basis report, it's going to look terribly confusing because it is applying that negative return proportionately amongst the positive ones. So I've received tons of calls about that where it's like, I don't understand where this number's coming from because this isn't on the original sale. This isn't on the original invoice. And then come to find out, it's like, oh, there's a negative, there's a discount line item, or there's a return item, a negative on a what it would expect to have a positive receipt. It does get very confusing on a cash basis. So best best practice is to use a credit memo and then apply, because those are positives, right? So all of the credit memos are positive. They just have the opposite effect of the invoice. And then when you apply that to the invoice, then QuickBooks gets a little bit better when it comes to, calculating and keeping those two things separate.
Yeah, and
So
if you've created an invoice and you said, "Yes," you can return it, and basically you're creating a credit memo for that invoice. You then that's the full amount. But and then you could just sit that on account. And what you could do, let's say you're like, I have a restocking fee. I need to cover my fees. Then you would want to offset by creating a fresh invoice for that date to put in those fees. And then you can apply the credit memo to it and refund them the difference. You don't wanna give away the farm. If it's your fault, give away the farm. If not, then you need to make sure you're covering, your overhead for the painful workflow to refund. Because I want it to
yeah,
be mine. I don't wanna give it back.
yeah, yeah. That's what Susan says, mine. What's he
Right. I
talking
agree with
about?
you, Susan.
My money,
Right.
what is
So
it?
put a credit memo on file
Possession.
and 9
Possession's
tenths of
90% of the law.
so yeah. So you want to make sure in all of if you reverse that invoice, you're not accounting for any other fees you want to charge for this high drama situation.
All right. So next week, I think we'll actually try it, do a little demo of this process of new QBO, new payments accounts, and
Yeah, so
how
you can
people
see
can
what's going on.
get themselves into trouble. And so hopefully you can join us next week on another Workshop Wednesday. And we appreciate you joining us this week. And
Thanks for
you
joining.
all have a great week.